Okay. All right, great. We are live on YouTube as well now, and people can also join from that area. All right, so I'm sharing my screen now, and I'm sure you can see me as I'm talking right now. Great. All right, guys, thanks for joining. Everyone, thanks for joining today's webinar. And today we're going to talk about um, how to prepare, right, for this season, how to trade, how to prepare your mind psychologically for trading this season, things you should look out for this season. We're gonna go into details on time frames, right? What type of trader are you? You have to know what type of trader are you to be able to be successful in the forex market. It's very important for you to know the type of trader you are. So in this session, we are also going to go into details on your personality of trading, right? So I hope this session is going to be more informative, and people joining today will learn more out of what we are going to learn in this session today. And I hope it's going to have a huge impact on your trades, and it's also going to, help you to make a lot of profit in your forex trading journey. All right, guys. So in this session, if at any point in time you don't understand anything, you can just ask the question. You can just type it in the chat section, or you can just raise up your hand and I'll open your microphone, and then you can answer, or you can ask your question by talking, or all right, or by audio. And I'd like to make you know that this webinar is being hosted or is being sponsored by M Trading. M Trading is a forex broker, right? It's a forex broker, and M Trading's then the M20 Forex Broker is giving 200% bonus on your first deposit. So if you deposit for the first time, or if you create an account and place a first deposit on M Trading, they are just going to give you a 200% bonus, and you can trade with that as well, and you can also make profits with the M Trading Broker. So guys, so you can go to www.mtrading.com, right, and create an account with the M Trading Broker. And also, you can also go on YouTube and like and subscribe to their videos and their channel as well, since every week they produce a global market recap, telling you of it's a great source of fundamental analysis, telling you of what happened in the market last week and what you should expect the coming week as well. And I think that could also be a very great help for your trading career. And as well, I'd like you to also subscribe to my YouTube channel. That's Bank Lifestyle. And I always put videos there every week, sharing my experience in forex trading. And also, I also teach how to trade forex over there. And I also give a lot of forex advice on my YouTube channel as well. So I hope, or I'd like you guys to also go to my YouTube channel and subscribe as well. Okay, guys. So in today's webinar, you're not going to waste much time. You're just going to go straight to the topic. And at any point in time, guys, if I'm going too fast, you can just draw my attention. And if there's any question along the way too, you can just ask the question, and I'll be so glad to answer your question for you as well. Right, guys. So there comes the topic: time frame and what type of trader you are. Okay. So we have a lot of types of traders, right? I hope you guys have heard of what is called a day trader. Day trader. You've been hearing that most of the time in the forex markets. If you've been in forex for a while, you've been hearing the term "I'm a day trader." Someone will say I'm a scalper, I'm a swing trader, and you once a while here I'm a position trader, right? So today you're gonna learn about all these types of personalities of trading, and you get to figure out yourself what type of trader you are. I'm not going to tell you what type of trader you are, but as the session goes on, you get to know for yourself what type of trader you are and what time frame will be best for you to place your trade in as well. All right, guys. So time frame. So before we get into this, we have to know what time frame is. You have to know what time frame is. If you've been placing trade of late, or if you've already been in the forex market and you are able to use the platform like the Trading View or the MT4 or MT5 platform, you've definitely come across the word time frame before, right? So the time frame is a specific period of time that a trader wants to view his or her chart in, right? So if you want to view the daily time frame, you can select the daily. If you want to view the monthly time frame, you can select it. The 1 hour time frame, the 4 hours time frame, right? You can view it, and every single candlestick you see there represents that time frame you entered. Well, guys, for people who don't know what we are talking about, I always like to show you how it looks like, since I like practical more than the theoretical aspect. So let's go into our chat. I hope you can see my screen as well, since I'm sharing my screen at the moment. I hope you can see my screen. Okay, so now we are talking about time frames. So this platform you see here is called the Trading View, tradingview.com. You can create an account with Trading View, and it's just a universal platform that you can just create an account with, and you can do your analysis over there. And after making your analysis on Trading View, you can switch to your MT4 or MT5 platform to place your trades. So it is where most of the time I like doing my analysis, since I find their tools to be very simple and fast to use, right? So you have other options. You can try to use, let's say, the MT4 for your analysis or the MT5 for your analysis. We also have the C trader, and we are going to go into that at the later part of this session. Okay, for now, let's try to look for where the time frame can be changed. All right, okay, so now we are on a daily time frame. You can see D over here. You can follow my mouse pointer. You can see D over here. It means day, it means 1 day. So every single candlestick you see here, whether it's red or it's green, it represents 1 day. So let's try to change the currency pair we are viewing the chart in. Let's go to Euro USD. Okay, let's go to Euro USD. This is the chart of Euro USD. All right. So every single candlestick you see here, whether it's red or it's green, it means 1 day. That's the movement of the market within the day. Okay. So today is the 22nd of October, and you can see that the candlestick is a bearish candlestick. That means it's coming towards the downwards direction. Okay. So we can see the red candlestick for the day here. So it means since morning, this has been the movement of the market. And you can see a wick on top and at the bottom of it. You can see some small pins at the top and the bottom. That's called the wick of the candlestick. Okay, it's called a wick of the candlestick, and it shows you it's like a shadow of where the price has been there before, right? So it's telling you the price has been there before, but it couldn't hold, and it's reversed towards the downward direction. It had some wicks here, and also this is the current price the Euro USD is trading at the moment. So let's try to change the time frame to, let's say, a 1 hour time frame. Okay. Okay, so we just select 1 hour. So you can see right here, every single candlestick you see over here too represents 1 hour. You see, so that's the movement of the market within 1 hour. So you can see this green candlestick is the current candlestick. That is, is moving at the moment. Okay, that's the current candlestick that's moving at the period or at this time we are talking, and you can see it has 46 minutes left. 46 minutes left for the candlestick to run out, and then there will be another candlestick. It will last for 60 minutes, and to run out it will last for 60 minutes, because every hour we have 60 minutes, and right now it is left with 46 minutes for this candlestick, this green candlestick, to finish its movement. And I mean, another candlestick is going to create in the market. We also have various kind of time frames. You can even choose the 1 minute time frame, the 5 minute time frame, or you can even go to as big as what the 1 month time frame, right? So 1 month time frame, every single candlestick you see here is the movement in the market between in a month, okay? From the first to the 30th or the last day of the month. That's the movement of the market you are seeing here on the screen. Okay, so I believe by this time you are getting an idea of what a time frame is in the forex markets, right? All right, guys. So after dealing with time frames, we also like to tell you we can categorize time frame into three parts. We can categorize it into three. We have the short-term time frame, we have the long-term time frame, and of course, we also have the mid-term time frame. Okay, the short-term, the mid-term, and the long-term time frame. We have three types of time frame. So we're going to go into details, and you'll see the type of traders who trade on the short-term time frame, right? You get to know the name traders are called when they usually trade on a short-term time frame. Okay, so let's go to the first one. That's a short-term time frame. Okay, so traders who trade on a short-term time frame, most of them they are called the scalpers. Okay, and the vast majority of novice traders want to make quick profits, so they start trading on a short-term time frame. Okay, so as a rule, they are used to be called the pipers or the scalpers in the markets. Okay, so they just take advantage of short movement in the market. So when there is a small, volatility in the market, they just take small profits from the market, and within a minute or two, they just close their trades and they take small profits. So for scalpers in a day, they can put a lot of they can go into a lot of positions, right? Or they can place a lot of trades, or they can execute a lot of trades within a day, because they are taking small profits in the markets, and they like to open and close their trades very fast. So what is a time frame that's going to be ideal for short term traders? Okay, so if I'm saying the time frame that's going to be ideal for them, I'm not trying to say that's the only time frame scalpers can use. They can use all type of time frames, right, to see the big picture of the market. But most of the time, if they are placing trades, they like to do their analysis on the 1 minute time frame or the 5 minute time frame, sometimes the 15 minutes and the 30 minutes time frame, because their position or their trade isn't going to last in the market for long. They just want to see the short-term movement of the markets. Okay, so if they place trades within 1 or 2 minutes or within some seconds, they just close their trades. And if they've made some profits, they take it, they open another trade, and that's how scalpers place their trades within a day. They like to trade a lot within the day because their profit is a small profit, and when the day goes to an end, they sum up their profits, and sometimes it can be a great income for them as well. Okay, so if there's any question regarding the short-term time frames, that's called the scalpers or the pipers, you can just put the comments or the question down below, and I'll be glad to answer your questions as well too. So let's go to the mid-term time frames. Traders who trade on a mid-term time frame. So what's a mid-term time frame? It can be the 4 hour or the 1 hour. Sometimes even with trading view, they have 2 hours and 3 hours. Okay, so the time frame within 1 hour to 4 hours, right? If traders really like to do their analysis between this time frame, they can be called the mid-term time frames, okay? Because they are not scalping in the markets, and they are also not taking, swing or position trades, okay? They are actually day trading. So traders who place trades and leave it for, a mid period of time is called day traders. And most of the time, what I do is called day trading. I like trading most of the time, as a day trader, and that's what I've been trading for a while. So I think for now I can call myself a day trader, right? So it's up to you to, identify what kind of trader you are. Okay, no one can tell you you are a scalper or a day trader or a swing trader or a position trader. You have to, trade on your own and get that experience and see what works or what time frame works best for you. And now you can know the category you fall into. Okay, so the midterm time frame or the day traders is the most popular group in the forex markets. So it's used by majority or vast majority of traders due to the convenience of the intraday trading. So if I open a trade in the morning, I can even close it in the evening. Or if I open it in the morning, I can close it in the afternoon. Or I can open a trade in the afternoon, I can close it in the evening, right? So I have that flexibility within the day. I'm not forced to open and close a trade within, some minutes or some seconds, right? I have that flexibility, and I can stay in the market for almost the whole day to, scoop a lot of profits in the market. Or even if I'm making losses, I can still stay in the market, or I can still hold my position till I make profits. Then I can close my trade. And if I'm not making profits, I can also learn, or I can also try to close or cut my losses in the market too. So you see that flexibility. So day traders can open a trade, leave it for a day or two in the market. That's why they are called the day traders. Now we have the last one, that's called the swing traders. Okay, so the long-term time frames, we have two personalities in the long-term time frame. We have one that's called the swing traders, and the other one that's called the position traders. Okay, so let's just first go to the swing traders and see what type of trades they place in the markets. All right, so trading using time frame is very similar to the concept of investing. Okay, trading using bigger time frames is very similar to investing in the market. So in this case, trading makes a minimum of time. Okay, all right. Since the main attention is paid to managing pending orders and other parameters that's to do required with constant adjustment. So it means if you are a long-term trader, so I first talked about the swing trading, all right? So if you are a swing trader, it means that you can also use the daily time frame, or you can also use the weekly or even the monthly time frame for your analysis in the markets. Because if you're a swing trader, what swing means is that if you open a trade, your trade can last in the market for days, right? So if I can open a trade today and I can close the trade next week, let's say next week Wednesday or next week Friday. So I can leave my trade in the market for days or even for a couple of weeks, right? That's called a day trader. So I'm having some questions here. Let's try to read them and get them answered. So someone is asking, um, for day traders, does it mean if your trade will fall within morning to evening and you get profits you can take from before your trading okay, so what I'm trying to say is that if you're a mid-term trader or if you are a day trader, right, you can open a trade at any point in time of the day, right? You can even open your trade in the night. It doesn't matter, right? But it's how long your trade is going to last in the market. So if you really want to be a day trader, you should plan your trade in such a way that your trade is not going to last for 3 days, 4 days, 5 days. At most 2 days, you should be able to close your trades and take profits or you should be able to close your trade and cut your losses, right? So that's what I'm trying to say. If you're a mid-term trader, you normally like to trade on the 1 hour time frame or even the 4 hours time frame, right? And your trade is not going to last like 72 hours and more in the market. So if you're a day trader, you can trade, and your trade can be in position for about 24 to 48 hours. It's normal for a day trader. And I hope your question is answered, guys. If the question is not answered, you can still, clarify it for me, and I can elaborate more um, on the answer. All right. Okay. So we are on the long-term traders. The long-term traders. So for the long-term traders, the first one is called the swing traders. Swing traders. So with the swing traders, most of the time I said they like trading on the daily time frame or the weekly time frame or even the monthly time frame, because for a long-term trader, it's like you are investing. So you want to you make profits over time, right? So you just want to relax in the market, and you see a long-term trend in the market. You like to place your trade and leave it for days or weeks to make a lot of profit in the market, right? But you should know there are some few disadvantages if you are swing trading. Have you heard what is called the swap before? There's something called a swap fee. So a swap fee can be charged on your trades, right? So if you leave your trade overnight, if I place a trade at any point in time today is Thursday, and I leave my trade till it is 9 p.m. Right now it's about 35 minutes or 25 minutes to 9 p.m. So if I leave my trades till 9 p.m., that means that I'm swapping my trade to the next day, right? So as normal human beings, we go to sleep, and when it's 12 midnight, we think we've entered into the next day. But for the forex brokers, immediately it's 9 p.m., their servers resets to the next day. So if it's 9 p.m. and your trade is still in position, they are assuming you want to swap it to the next day. So a swap fee is going to be charged on your trade, right? Most of the time you can also gain a small fee as a bonus on your account. But you have to look into the currency classification for you to know the interest rates of the currency you are trading, whether you're going to be charged a swap fee or you're going to gain a swap fee. So immediately it's 9 p.m. today. If you haven't closed your trade, you see that they're going to deduct a swap fee from your trading account, okay? Or you're going to gain some swap fee on your trading account. So you have to read the currency classification to be able to know whether when you are swapping, you're going to be charged or you're going to gain a swap fee. All right, guys. So swing traders can leave their trades for a couple of days or even for a few weeks, for 1 week or for 2 weeks. And we also have what is called the position traders. These are the big dogs in the market, right? These are the whales in the market. So for position traders, if they open a trade, all right, the trade can even last for months or even for years in the markets, all right? And it's similar to investing, right? They are just in the markets for a long period of time, and they want to make period profit over time, right? They're not rushing for any quick gains. It's like investing in the market. So those are position traders. And if your account balance is not really, heavy to a point, you can't successfully be a position trader, because there's going to be a lot of swap fee on your trades, and it can eat into your balance, and you can lose your money in the forex market as well. So you have to you have to know how much you are investing in the market, and and choose the type of um, time frame you want to trade with, right? So it's very important for you to know this in the market as well. So if you are trading with, let's say, $50, it's very difficult for you to be a position or a swing trader, right? Unless your lot size is very, 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 very tiny. That's where you can last in the market for a longer period. But if you trade with a higher lot size with $50, you can't, swap your trade as a swing trader or a position trader, because swap fee can eat into your trades, and you can lose your money as well in the markets. All right, guys. I hope this makes sense. And we go to what we have next. Okay, guys, we talk about the psychology of trading, right? We talk about some psychology of trading in this session. Okay, so psychology, most traders, right? Most of the time I get, emails, messages, and stuff, and people are just like, I want to trade Forex, I want to make some money. Um, my school fees. I just want to, make some money to pay my school fees. I use my school fees for this and that, so I need some money. Um, I'm in serious, I'm in hard times, and I need money, right? So, and people are also like, I want to become rich and whatever it is. So that's their intention of, coming to trade forex, right? So your intention is very important when you are, getting into the trading world. Okay, so if you have a poor, psychology or intention like this, that trading is a get rich quicker scheme, and you're just coming to make profit in the market, and you are going to buy a Lamborghini or whatever it is, then you might be very wrong, or whoever told you about forex trading was actually lying to you. Okay, it's possible you can trade in the markets, and be very rich, but it takes time and a lot of, dedication and a lot of learning in the forex market for you to get to that point, right? So intention is very important, or is a key to a successful trader in the market. So you have to get a good intention before, you step into the forex trading business. Okay, it's very important. So the next one is what you do and what you do in the trade, right? What you do before you place a trade and what you do when you've placed the trade is very important. So most of the time, people enter the markets and they are hoping to make profits, right? And you should know that hope is not a strategy. You need a strategy to make money in the market. Without a strategy or without a plan, a good plan to enter the market, then it means you are gambling. Okay, so I have a video of gambling on my YouTube channel. You can also check it out as well. Okay, you can go, you can type the bank lifestyle in YouTube, and you can see my video about gambling, the difference between trading and gambling. So you shouldn't enter the market hoping that you're going to make profits. Okay, because hope is not a strategy. You have to have a strategy before you place a trade. Okay, before you even click a button to place a trade in the forex market. And when you enter the trade too, you have to know what you are going to do after you've entered the trade. You have to know where you are going to put your take profits, right? The level that you think, the markets can reverse or is going to face some resistance or support. That's where you can place your take profit and also your stop loss in the market, so that you are not confused after you've placed your trades. You don't know whether you are making trades and you should leave it to make more profits, or you should, just close your losses, right? You should have all this figured out before you click a button to place your trades. It's very important for your success in the forex market as well. We have what is called the FOMO. FOMO. The FOMO, the full meaning is the fear of missing out, right? Fear of missing out. So in 2020, gold had its all-time high at a 2000, and about 2088 cents and or so, right? So gold had its all-time high, and it was trending. That's gold. It's rising. Gold is gonna make people millions and stuff. So people just heard about this and just, took their money, went to invest in gold. As soon as people invested in gold, gold had a pullback, right? Or gold had a correction, and people lost money in the market. You see, so you should, avoid the fear of missing out. People think they are going to miss out on the gold move, and people are making money. And they are just sitting down, right? You should just do analysis by yourself and not by speculations. Okay, making analysis by yourself is very important, or is very key in the market. You shouldn't trade impulsively just by speculations. If there's speculation, this currency pair or this asset is growing or is going towards the upwards or the downwards direction, you should just go into your charts, make your analysis, and look into it further to be able to take a decision. You shouldn't just take a decision based on what people say or based on what you see on Twitter or stuff. Yeah, you shouldn't take a decision based on that. Okay, so you should, avoid the fear of missing out in a trade, because for every upwards movement, or for every downwards movement, there is a correction. Okay, if a currency pair spikes towards the upwards direction, there's going to be a correction before. If it's an uptrend, it can continuously go up. So you have to make your analysis and see the best entry point you're going to place your trade at. It's very important, guys. You should note that as well too. We talk about emotions. Emotions. You should be very strong emotionally to be able to be successful in the forex market, right? You should be very strong emotionally to be able to trade in the forex market, right, guys? So when people enter the forex market, most of the time beginners, when they enter the forex market and they start making some profits, they are so happy. They are so happy, and they start over trading because they are building up their confidence, and they think now they are super in the market and they're going to make profits on every single trade. So they just increase their lot sizes, and you see in just a second they blow their trading account. Guys, what you should know is that if you make profit in the forex market, if you even make $100 of your $20 deposits in the market, you shouldn't be extremely happy, because the goal for you depositing your $20 in the market was for you to make profits. Okay, so if you made profits, it's your fundamental right. You should make profits in the market. So you shouldn't be extremely happy for making profits in the market. It should be a normal thing for you, because the idea is to make money in the market, right? So if you make market, it shouldn't be something extraordinary for you. You shouldn't be so happy and start over trading and start making shady decisions that's going to blow your account, because 90% of retail traders, they lose 90% of their deposits in 90 days, and you don't want to be one of those traders, right? You want to be sticking in the market for a longer period of time and make more profits in the forex market as well. So if you make losses as well too, you shouldn't be so down, right? So somewhere around 2017 getting to 2018, I lost a huge amount of money in the market, and most of the funds that I was managing wasn't my personal money, right? It was people's money, like family members, friends, and stuff. So I was managing a private, account, and I really had a very shocking moment of my life. It was on Thursday. On Thursday, I was trading with about $2,000. And on Thursday, I've made about 4,000. I've almost doubled it. I started on Monday, and I've almost doubled it on Thursday. And I was extremely happy, taking screenshots and I was putting it on my status, Instagram and stuff. Telling people of how I was making profit in the forex market. And the next week, I lost everything I made. I lost all the money in my forex trading account, and my balance was about $13, right? So I lost everything, and that was one of my darkest times in the forex market. So you shouldn't be extremely happy when you make profits, and you shouldn't be extremely, sorrowed, or you shouldn't be so down when you make losses. So when I made losses, it's really, got me down, and for a couple of days, I wasn't myself. I wasn't able to go out. It was really hard for me to even tell people I was managing the account how I've lost the money, and it wasn't a good time for me as well. But it really took, perseverance and a very great dedication in the market to be able to bounce back on my feet and trade the markets again. If I made that, I made that incident, let me down in the markets, then that means today I wouldn't be, on this webinar today, teaching you or showing you the lessons I've learned in the forex market. So you shouldn't let, bad trades, put you down in the market. Sometimes it's really good, and sometimes your analysis is very good, but still you can make losses, and you can also make losing streak in the market. But what's important is to go to the exercise table. Learn new things, learn from your mistakes, come back in the market again, and try to make profit, or try to recover from your losses. It's very important, guys. You have to note that as well. So what you do after a trade. Okay, so what you do after a trade is very important. Um, in the markets. So what you do after a trade, after you've had a very good day, what you have to do, you have to go back and look into your trades and look at what you did well, right, within the day that really made you profit, so that you can learn that, and next time you can practice that again, and you can continuously be profitable in the market. And if you had a bad day, you can also go back and look into the chart, look into the setup, what didn't go well. Was there a news that was released that made me a great loss in the market, or was my strategy not working? Or you try to figure it out. What happened that made you lose that amount of money is very important for you to also, know that as well in the market, so that you can always learn from your mistakes. That's the only way you can better yourself in the forex markets, guys. Guys, remember, at any point in time, you can ask me a question, and I'll be glad to answer your question as well. All right, guys. Let's go to. I was trying to tell you last week that I'm trying to talk to M Trading, right? M Trading, so that we get the opportunity to go into the MT4 or the MT5 platform, so that we can learn more about the platform and the tricks and the hidden features in this platform, so that you guys can know and also use it in the market, the good way to make profits on your trades as well. So for the coming weeks, guys, try to join our webinars every Thursday. Every Thursday evening, 8 p.m. we have a webinar. So try to join our webinars. And for the coming weeks, you're going to have great topics, and you're going to learn more from what we have in the market. So guys, people ask, and what's the difference between trading forex, trading commodities like gold, oil, and stuff, and trading stocks as well? So for the stock markets and the forex markets, the stock market is not open 24 hours in 5 days, but the forex market is open 24 hours in 5 days, and you can place your trade at any point in time at this on any currency pair you want. But the stock market is not like that, right? And also for the stock market, sometimes their commission or their spread can be really high, but for the forex market too, they can't. Sometimes they are really moderate, right? Their spread is really moderate, and they don't charge you a lot for placing a trade or investing in the market. Sometimes for the stock market too, there can be market manipulations, right? Companies can just create news for themselves, and they can just capitalize on that news and make profits for themselves. And all of a sudden, they can be, bad or crazy volatility in the market, and can lose your account. And people say there's also not volatility, or there's no market making in the forex market. But I strongly don't believe that. I also believe there's market making in the forex market as well. And in the coming webinars, we're going to talk about market making, how the banks and the big institution place their trades, and how they lure retail traders like us to lose our money in the forex broker account. So we are going to learn how the banks trade, and how based on that knowledge, we can also have some tweaks in our trading strategies, so that we also avoid falling into all these traps of the banks and the big institution, and losing our money in the forex markets. Guys, at this point in time, I would like to take your questions. If there is any question, you can just ask at this moment, since our session is almost at its end, right? Guys, once again, I would like to tell you M Trading. M Trading is the official sponsors, or they are the host of this webinar, right? And they are giving 200% bonus on your first deposits. And withdrawal and deposit is so easy with M Trading. I've personally tried and used their system, and I must say it's a good system. Deposit is fast, withdrawal is fast. You can make deposit and withdrawal with mobile money, GT Bank, and overall, I mean, it's a good broker. It's a good broker. I've tried using a couple of times, and um, deposit and withdrawal is very fast for me. And they are giving 200% bonus on your first deposit, so you can also try to take advantage on this 2%, 200% bonus, and trade in the market and make some profit as well. So someone is asking, for how many years can someone become a good forex trader in the market? So I have 7 years experience in the markets and still counting, right? And I wouldn't say I'm an expert trader as I sit here right now. For every single trader, for every day, you have to learn something new. Every single day that I turn on my computer and open my chat, I learn something new in the market. So it has to do with consistency. I mean, constantly learning something in the market. You can't never, I mean, there's not going to be a day that you say, yo, I know everything in the forex market. It's not possible. For every single day, the market teaches you something you never know, right? So I mean, it depends, and it also depends on your learning curve, right? How fast you learn, how fast I mean you practice when after learning, right? How your understanding is, okay? How often you join webinars like this, how often you watch forex videos, right? So all these, I mean, helps you to increase or sharpens your learning curve. I mean, 7 years or 6 years ago, when I was getting into the forex trading business, I never joined a webinar. I never had a webinar like this to join. Never. I mean, everything or most of what I learned in the market was self-taught, right? Putting my money in the forex account, lose the money, learn something from it, do it next time, lose the money, learn something from it. So that's how I mean I got built up in the forex markets, right? So around 2000 and around 2017, 2018, I was trying to go back into my trading history and see how much money I've lost, right? And I saw the money I've lost was huge. And now the profit I was making was almost about to, I mean, surpass my losses in the market. That's where I got confidence that my time or my effort has begun to, I mean, pay off in the markets, right? So right now, I think I can call myself a profitable trader, and I mean, I make profits often when I place trades with the strategies and indicators I use as well, right? So it depends, guys. You can't say you're gonna learn forex for two years or 2 months or even 10 years, and you'll be an expert or you know everything in the markets, right? You're definitely going to learn more, but every single day there's something you need to learn in the market as well. Guys, thank you very much for joining this webinar. It's a great pleasure for having you. And at this point in time, if there's no question coming in, I think that's it for today. Guys, please, I would like for you to subscribe to M Trading Africa on YouTube and also Bank Lifestyle on YouTube. I think for our channel, you can see our channel on the screen right now. I think we have a little bit over 2,500 subscribers on our channel, and we are growing, guys. I'll really be happy if you subscribe to our channel and make us one of the biggest, or if possible, the biggest forex trading um, YouTube channel in the world, right? So, guys, let's build a great community in forex trading in Africa and also the world. So, guys, thanks again for joining this webinar. It's a great pleasure, and I hope I'm going to meet you again next week, same time, Thursday. All right, guys, we're going to meet again next week. Thanks, guys, for joining the webinar. I think I have one last question here. Let me answer before I go. Um, So someone is saying, okay. So what we're going to do is that what's most important is for you to join our webinars every Thursday, and also you can also send us a message right on Telegram as well. If I don't see that message, one of our team members is going to reply you, and we will see how best we can help you to, I mean, sharpen or fast your learning curve in the forex market as well. There's been a lot of messages coming in on Telegram, on Instagram, and everywhere, right? So, guys, we'll be reviewing every question and we'll be helping you in your journey too. So, forgive us if we haven't been fair to you for answering your questions and assisting you in diverse ways, right, guys? We are going to solve that issue. So you can just continuously, or you can just send us a text again, and we help you to, or you solve whatever you want to. I mean, know in the markets as well. All right, guys, that's it for today. Thanks for joining this webinar, and we meet next week.